पोषिते
शैलेन्द्रराजेन सम्पोषिते
अगस्त्यात्रियोगीन्द्र संसेविते
अगस्त्यात्रियोगीन्द्र संसेविते.
Namaste one and all. Now I am going to give you about the details of Monetary Policy Committee decisions on February 8th, 2024. Actually, what is the repo rate announced in this one? What is the standing deposit facility rate? What is the marginal standing facility deposit rate? And what is the bank rate? And whoever participated, whoever voted against or for, like that I want to tell you through this video. And before going to video, I request you all to please like, share, subscribe and comment also, of course, and watch all our videos of YouTube channel Suvarna Chundi. And also I request you to please go for your sure success in your JIV examinations and CIV examinations, particularly Krishnavedi materials for May 2024 and June 2024 respectively. Here, on the basis of an assessment of the current and evolving macroeconomic situation, the Monetary Policy Committee at its meeting on February 8th, 2024 decided to keep the repo policy rate under the Liquidity Adjustment Facility LAF unchanged at 6.50%. That means present repo rate as on date, it is 6.50%. Consequently, the standing deposit facility, of course, SDF, I have already made one more video regarding standing deposit facility and what is standing deposit facility and all. I have explained in that video, and you can go through that video also. And today's SDF rate remains unchanged at 6.25%. That is always SDF rate is 0.25% below the repo rate. As per R.B.I latest Monetary Policy Committee decision, SDF facility rate is 6.25%. And the marginal standing facility rate, of course, bank rate also at 6.75%. That means marginal standing facility and bank rate is just 0.25 above repo rate, policy repo rate. Policy repo rate is 6.50%, whereas bank rate and MSF rate is 6.75%. SDF rate is below repo rate, just 0.25%. That is presently 6.25%. So it is very clear, all these 3-4 rates. Repo rate is 6.5%, SDF is 6.25%, MSF and bank rate is 6.75%. In this meeting, the M.P.C means Monetary Policy Committee. Of course, you all are knowing that total 6 members are there in this committee, and 3 from Reserve Bank of India and 3 from central government. This committee also decided to remain focused on withdrawal of accommodation to ensure that inflation progressively aligns to the target while supporting growth. You all know these decisions are in consonance with the objective of achieving the medium-term target for Consumer Price Index CPI inflation of 4% within a band of plus or minus 2% while supporting growth, of course. This 4% target also within a band of plus or minus 2%, you all are know, in my earlier videos also I have told that is up to 2026 year. Afterwards again they will decide what to be given. Particularly in this meeting, 2-3 points are most important points are there. One is KFS. KFS means Key Fact Statement for retail and MSME loans and advances. So far only scheduled commercial banks are providing KFS to the borrowers. KFS is nothing but what are the sanction conditions, what is the charges are going to be given, like that. Anyhow, I will give you the details. Currently, KFS is specifically mandated in respect of loans by scheduled commercial banks to individual borrowers, digital lending by REs. REs means regulated entities, and microfinance loans. Now, it has been decided in this Monetary Policy Committee to mandate all REs to provide the Key Fact Statement KFS to the borrowers for all retail and MSME loans, providing critical information about the terms of the loan agreement, including all-inclusive interest cost, shall greatly benefit the borrowers in making an informed decisions. The next some more decisions also in M.P.C they have taken. Enhancing the robustness of AEPS. AEPS means you all know that Aadhaar enabled payment system. It is operated by NPCI. This enables customers to perform digital payment transactions in assisted mode. In 2023, more than 37 crore users undertook AEPS transactions, which points to the important role played by AEPS in financial inclusion. So please note down, in any examination, there is a chance of asking how many users undertook through AEPS transactions in 2023, that is 37 crores as informed by R.B.I. To enhance the security of AEPS transactions, it is proposed to streamline the onboarding process, including mandatory due diligence for AEPS touchpoint operators to be followed by banks. So now Reserve Bank of India decided for AEPS transactions to streamline onboarding process and due diligence also tightening. That means still it is taking a better due diligence than earlier. And detailed guidelines will be issued by Reserve Bank of India in due course. Next one is principle-based framework for authentication of digital payment transactions. Over the years, the Reserve Bank has prioritized security of digital payments, in particular the requirement of additional factor of authentication, AFA. Though R.B.I has not prescribed any particular AFA, the payments ecosystem has largely adopted SMS-based one-time password. Through SMS, we use it to receive OTP, and with that we use it to validate it. With innovations in technology, alternative authentication mechanisms have emerged in recent years. To facilitate the use of such mechanisms for digital security, it is now proposed by R.B.I to adopt a principle-based framework for authentication of digital payment transactions. This is also framework for authentication of digital payment transactions. The R.B.I is going to give instructions in this regard shortly, and of course separately. At that time I will make a separate video on this particular point. Next, CBDC. You all know CBDC is a central bank digital currency. On this, what is the new development as per Monetary Policy Committee decision? Introduction of programmability and offline functionality in CBDC. CBDC means central bank digital currency pilot. The CBDC retail, CBDC or pilot currently enables person to person, P2P, and person to merchant, P2M, transactions using digital rupee wallets provided by pilot banks. It is only restricted through some banks only, not by all. It is now proposed to enable additional use cases using programmability and offline functionality. Programmability will permit users like, for instance, government agencies to ensure that payments are made for defined benefits. Similarly, corporates will be able to program specified expenditures like business travel for their employees, etc. Additional features like validity period of geographical areas within which CBDC may be used can also be programmed. Second, it is proposed to introduce an offline functionality in CBDC retail for enabling transactions in areas with poor or limited internet connectivity. Where there is no internet connectivity or very poor connectivity is there, in those cases the RBI want to go for offline functionality, particularly in CBDC retail. Multiple offline solutions, the proximity and non-proximity based across hilly areas, rural and urban locations will be tested for this purpose. These functionalities will be introduced through the pilots in gradual manner, and detailed guidelines will come during the course of time. Here, actually, who voted for repo rate should be continued same, and who has not voted, we'll see. Dr. Shashanka Bhide, Dr. Ashma Goel, Dr. Rajiv Ranjan, Dr. Michael Devavrata Patra, and Sri Shaktikant Das voted to keep the policy repo rate unchanged at 6.50%. Whereas Professor Jayant R. Verma voted to reduce the policy repo rate by 25 basis points. Of course, you all know whatever the majority vote comes, the decision will be taken like that only, since majority decision is 6.5% to continue repo rate. That's why they have not changed. Dr. Shashanka Bhide, Dr. Ashma Goel, Dr. Rajiv Ranjan, Dr. Michael Devavrata Patra, and Sri Shaktikant Das voted to remain focused on withdrawal of accommodation to ensure that inflation progressively aligns to the targets while supporting growth. Whereas Professor Jayant R. Verma voted for a change in stance to neutral. Only Professor Jayant R. Verma differed from the decisions of the majority in the both cases. These minutes, of course, of the M.P.C meeting will be published on February 22nd, 2024. And also, the next meeting of the M.P.C is scheduled during April 3rd to 5th, 2024. At that time, I will come back with the latest developments as per that monetary policy through my video. And our YouTube video channel is Suvarna Chundi. And also I request you all to please read our Krishnavani materials for JIB and CIB, which are very much useful for your sure success. And concentratingly, if you read, definitely you will pass it. There is no doubt. And what are the doubts you are having, still after purchasing of our materials, I will clarify through WhatsApp. Okay, thank you very much for watching this video. Have a nice day.